Good morning, traders. This is Frank Cholly with RJO Futures in Chicago, coming to you on Wednesday morning, October 3rd, with your grain market morning commentary. Currently, we have grains trading lower across the board. It's getting to be a common theme the past week or so, isn't it? Corn's about 6 to 7 cents lower, but it's holding that 750 area pretty good right now. Soybeans down 12 to 13 cents. Soybeans are below 15.20 right now. It did hit 15.04 in the overnight, so that's a level I was talking about yesterday, $15 or so. Below that, we have that gap that needs to get covered down around the 15.80 area. So, hey, I wouldn't be surprised if we continue to see this market slide. Wheat, just 6 to 7 cents lower. In the outside markets, it's mostly risk off. The energies are down, equities are down a little bit, dollar and treasuries up. Those are the safe havens. Yesterday in the afternoon, we had one of the private forecasters release their estimates on production and grain yields, and this again is very typical. Next week we have a USDA production supply demand report, a monthly report, and these private forecasters like to come out a week ahead and release their own estimates. So while we're still trying to price in better yields, one forecaster yesterday came out with soybeans about 38.2 bushels per acre. In September, the USDA was just 35.3, so that's a big increase. Again, we're getting better than what we expected, but it's still not good. So let's keep in mind, at some point, this correction finds a bottom. I can't tell you exactly where it's at. I could give you some ideas where the market may find support, where the buyers might come in, but it's not just one level. Value is a range, not just one specific price. So if it's not $15, maybe it'll be closer to $14.75, but somewhere in here, it starts to get a little overdone, and the buyers will probably come back to the market, but I'm not willing, at this point to say, hey, it's over. So again, there's no new news here. We're still trying to work out, the improving yields and the fund liquidation that's going on. It's always very difficult with that too to say, when are these guys done? Well, when they're done, they're done. In the corn, it's still holding that 750 level. So I'm going to get back to that wheat corn spread. I think that the downside in the corn is very limited as opposed to the potential downside in the wheat. Wheat is still holding above that 850 area. That market's been more in a sideways channel. We've seen corn go through a correction from a little above $8 all the way down to about $7. Now it's back to 7.5. It makes sense. 50% retracement hangs around that area for a little bit. However, wheat has been more of a sideways channel, and 850 in the December contract is the bottom end of that. We're very close to that right now. Yesterday I talked to you about that close below 871. We closed right about that area. Might have been 861, but anyway, we had a negative close. We should get some follow through. Wheat takes out 850. You should see that spread between wheat and corn start to narrow. So the December wheat corn spread right now is about $1.13. A week ago is $1.50. I wouldn't be surprised to see it go back down to 80 cents, maybe even 60 cents. Wheat over corn. So keep an eye on that one. It's a very good trade opportunity there. If you have any questions about it, please feel free to call me. My number is 800-826-4124. And as always, remember that trading commodity futures does involve substantial risk of loss and is not suitable for everyone. Thank you.